Well, for those who thought the Lunar New Year week was going to be a quiet one, they're sorely mistaken. This is this week's freight market update. Today is February 24th. I'm Mike Emiliani. Let's get right into it. The week was dominated by a constitutional collision in the United States that fundamentally reshaped the global trade landscape. The Supreme Court's ruling against the use of emergency powers for tariffs effectively dismantled the legal foundation for the Trump administration's IEEPA tariff program, leading to the imminent cessation of billions of dollars in duties. However, the resulting pivot to a 15% global surcharge under Section 122, a bridge measure valid for 150 days, plunged international relations into fresh turmoil. The European Union's decision to pause its summer trade deal with Washington underscores a growing trust deficit as allies and adversaries alike struggle to navigate a U.S. trade policy that has transitioned from high-stakes negotiation to a state of total legal and procedural volatility. Shifting now to this week's ocean, air, and freight markets, starting first with the ocean markets. The Trans-Pacific ocean freight market has remained in a state of stasis as the industry navigates the tail end of the Lunar New Year holiday. Rates have held firm at low levels established earlier this month, with almost no price movement recorded week over week due to the total shutdown of manufacturing and logistics activity across Asia. Looking first at China to U.S. West Coast. Pricing remains stable at the current floor of $1,450 to $1,600 per container. This represents a continuation of break-even levels that we've seen since beginning of February. Looking now China-U.S. East Coast. Much like the West Coast, rates to the East Coast have shown almost no signs of change, holding steady between $2,400 and $2,500. Now getting into this past week, what happened? Well, not much, short of the IEEPA decision. The Lunar New Year was the main event. The market is currently experiencing a peak of Chinese New Year holiday, which has effectively halted all new bookings and shipping operations in China and Southeast Asia. Operational dormancy. Most market participants in Asia are currently away on holiday, leading to a complete lack of interest in new business and shipping schedules. Pre-holiday volume exhaustion. The rush to ship cargo before the shutdown concluded last week, for sure, leaving behind a very little in terms of current cargo movement. Trucking rate normalization. Following the high trucking rates at origin across China the previous week, international logistics costs across China have leveled off as the workforce has largely transitioned into the holiday period. Now looking ahead, what can importers expect in the week ahead? The immediate outlook remains exceptionally quiet, with next week expected to be even shorter in terms of market updates as the holiday concludes. The market is effectively on autopilot until the beginning of March, or certainly the second week of March. The industry is now focused on post-holiday recovery in March. Shippers should anticipate a period of catch-up as factories reopen, though the strength of this recovery will depend on whether carriers can find ways to push rates above current levels or break-even levels. It is expected that there is a GRI coming in March off the heels of the Supreme Court's decision against the Trump administration. Down in the description of this week's video, you can find some links that we liked reading this week and that helped go into this week's update. As always, this week's update is powered by FreightRight's True Freight Index, your answer to the question, what's it cost to ship today? That's all for this week's update. We'll see you next week.